Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Karen Walker, Chief Financial Officer of Sysdig, to discuss SEC rules on cybersecurity risk management for reporting and security leadership communications with the board. Karen, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me, Jill.
You got it. And give us some background on what the SEC guidelines are.
So the rules just landed in July, and they're actually really codifying basically interpretive guidance that the SEC previously launched, first in 2011 and 2018, really designed at providing transparency and standardization. Given that the attack surface is growing day by day, more companies are digital. The SEC's attempt at these rules is to increase the transparency and standardization among companies.
So it sounds like a materiality component is really what the change is here.
Yeah, there's two big things that people are talking about and that were heavily discussed in the comment period. One is materiality, which requires significant judgment, and the second is that once a company determines that a cyber incident is material, they have 4 days to file an 8K and basically provide, what happened, just providing an overview of like what is the magnitude of the incident, and also what is the potential material impact.
So we know reporting is going to be one of the key updates. In what other ways will this impact companies?
Well, what a lot of people are talking about, both on the technology side, finance side, and legal side, is the fact that it's really going to have to change the operating procedures and the controls that a company may have in place. So, for instance, a SOC team or a CISO who are responsible for the investigation of incidents, they're very technical folks, but now they have to actually be educated on what does that definition of materiality mean. So there's probably likely going to be a governance structure that is cross-functional that includes CFOs, legal, and the security teams.
Right, and to your point, the CFO function certainly is working more with the CISOs and the security teams. So should a company get breached, what advice do you have as a CFO in terms of next steps?
Yeah, I think that these rules go into effect in December, so I think the time to act is now, and really to have these discussions at the board level, internally, examine your processes and your controls, and not only your internal, but when you think about supply chain risk, you need to really make sure that you understand what the controls are at your vendors as well. I would also recommend maybe going through a tabletop exercise and a lot of training, I think, to prepare for this.
So we know the rules are for public companies, but what about the impact with private companies?
Yeah, I just hit on one of those with the supply chain risk, right? I mean, that is a lot of companies use third-party software. So even if you're a private company, you're likely going to get questions or inquiry either during the procurement process or at renewal time or even prior to that. And then certainly for companies that are late stage looking to go public, this is something that they really need to think about in terms of their playbook, in terms of readiness.
When do companies have to be in compliance by?
This goes into effect in December of this year.
What's the general consensus around the guidelines?
Well, it's interesting. I think that certainly I've heard from a lot of practitioners and CISOs that there is a lot of concern that they have, because if you talk to security teams, there's a lot of noise in the system day to day. And so people don't want, on the one hand, things to come to a halt and be bureaucratic, but on the other hand, it's like, how do we train up these teams to actually effectively escalate things when they need to be escalated? And I think for smaller companies, there's a concern about cost. There might be an undue burden on smaller companies in terms of having to either rely on third parties or increase their staff, and there might be just a more significant burden on them versus large companies.
I know one of the challenges is determining what a material event is that hasn't been made clear, and of course that could be arbitrary. A material event might be different for one company than the other. So what happens if customer data is lost? How do the folks you speak with think that additional guidance is necessary?
Yeah, you bring up an excellent point, Jill, because I think there's, on the materiality assessment, there's both quantitative and qualitative, right? And quantitative tends to be a little bit sort of more straightforward, like how much revenue is lost or potentially to be lost, or how much cost would you incur as a result of maybe ransom pay or just cost to investigate. But then the qualitative is really around brand, right, and reputation, the risk of loss of customers. So I think that's going to be the other element that requires a lot of judgment.
All right, Karen, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.